The objective going forward is I'm going to act as a moderator. I'm going to kind of structure the conversation, make sure that we cover a lot of different topics. We want interaction from the audience. And so if you have a question during any portion of it, please feel free to put your hand up, and we'll call on you and make it as interactive as possible. Do keep in mind, though, we're going to try to cover a lot of different information about technology and infrastructure and things like that. I was trying to think of a metaphor or an analogy to, look at the banking industry. I used to be with an asset liability software company called Hogan Systems. I know you guys are old enough to remember any of that, but we sold asset liability software. It was COBOL-based software. So I was trying to think about, maybe General Motors. And General Motors, of course, went through bankruptcy. We all know that. I'm not talking about that, but I want to talk about their small block V8. They created some great engines that you saw in the Corvettes, and they kind of put them into muscle cars and all sorts of things. And they were very, very good engines. And, time has progressed now. They introduced fuel injection to replace carburation. They introduced air conditioning and all these other things. But these organizations up here in building their systems are actually still supporting that 1964 V8, in their day-to-day activities. So using that concept, let's talk a little bit about the anchor that legacy systems may or may not, present for you in terms of your strategy and planning. We'll get to mobile payment systems in a second, which is kind of out in the future. We've got internet coming back. John, I'd like to start with you in terms of First Data. You may not have a lot of legacy systems that you're trying to carry forward, but if you do, how do you factor that into your planning and strategy?
Well, we do have a lot of legacy systems, and we have over 78 different processing platforms around the globe, and we continue to invest in those platforms. So they average about 8 to 12 years old on a technology base, and about 8 years old on a software basis. And they present a challenge for us because that technology requires a lot of care and feeding. But we do make investments. Service availability, service quality, and security are job one for First Data, and we invest in those legacy platforms. Our challenge is how to invest in new platforms, new technologies. And one of the things that we have done recently is move our whole development methodology and our philosophy of development to a service architecture. So we'll look to harvest from those legacy platforms what works well, the business processes, the rules that have been tuned and fine-tuned over and over again for the marketplace that we're in. Extract those processes from those legacy systems and move to a modern technology footprint. And that will help us consolidate our 13 global data centers. It'll help us consolidate our development centers around the world as well. So for us, SOA and BPM are key driver or key initiatives in unbolting ourselves from the legacy environments that we've inherited over time.
Do you foresee yourself completely unbolting and letting it go at some point?
Our end goal is to have a much more agile platform, and I think that we will always have some of that legacy environment where it's tuned to a specific marketplace or to a specific set of customers. But our goal is to eventually be unbolted in a much more virtualized technology environment, on-demand computing environment that we call it, which is somewhat in an internal cloud structure.
As a percentage of your total budget, how much would the care and maintenance of your legacy systems represent, round numbers?
Right now, it's about 65%, and we're trying to trim that. The more we can trim that, the more investment we can make in that more agile platform.
Okay, Olin, would you address the same thing?
Sure. We also have a number of legacy systems. I think my opinion is that for what they do a good job. If you're talking about core authorizations, posting transactions, unlike Don's analogy, I think that the underlying technology has evolved quite a bit in that CPU cycles, cost of DASD, those things are much more efficient. So playing off of your analogy, the it may be a big block V8, but the gas mileage is much better. So, I think they're very mature systems as well. And as we know, the expectation in the industry is that things run all the time. Authorizations, it's not acceptable for that not to run. So proven systems, I think, are good in that regard. I think the biggest challenge we have is that the interaction with other systems has changed quite a bit. So our focus as well is around service-based architecture, decoupling a lot of the functions that we have on legacy systems and using them in a different way, exposing them to other systems and basically reusing those core components of legacy applications.
Olin, would you take just a couple seconds and define what a service-oriented architecture is?
Sure. So if you look at a typical system from back in the 80s, let's say, everything was pretty much bundled. The user interface layer, the business rules, the data layer were all fairly proprietary and intermingled. So trying to use a service or a business function was very difficult. So when we talk about service-oriented architecture, we're talking about really removing the user interface portion, abstracting the data piece, and really serving things up where they can be reused within our organization and extended beyond TSYS's domain to be used in other places. So and we've seen this already. So we have customers that want to build their own user interface front ends, and being able to expose what we normally would have packaged up, including the screens and everything, in a different way with a web service or something like that is really what we're talking about.
Would you say your development effort is a very user-driven environment because they can deploy these new technologies?
I think it is. As you go through the different services that we have, many of them are in higher demand than others, depending on what our customers want to enable within their shop. So it is driven in that regard. Some of our systems are much more web or service oriented than others. But we have client focus groups and client advisory boards that really shape our direction around what services are most important. There are certainly some things that we won't service enable just because there's not a need for those to be consumed outside.
Rajiv, could you address that from your perspective?
Sure. Can you hear me? Yeah. Must sound like the Verizon guy. I agree with Olin and John's point from the IT side. Let me try to give you a different spin on that same question. Let me take it from the perspective of let me take a question on strategy and planning. How do we drop our strategy and plan our products, fully knowing that there are a lot of our products built on legacy systems like our customers, like SunTrust is using. At the same time, there are new customers who are asking us for different functionalities, so have to release very different kind of products, taking advantage of some of the newer technologies that they talked about. So our strategy, the way I run it is, we have a 3-year, what we call growth playbook, but it's a 3-year running strategy paper we have. We consciously divide our customer set and our product set into 3 parts. One is quote-unquote legacy. The legacy word has a negative connotation, but from a business person like me, it's a great cash flow. I mean, if I didn't have those legacy products, there's no way in God's green earth I can support the second and the third bucket. The question there we have is, how do we, I'm going to use the phrase, how do we milk that asset? How do we continue to keep up the SLAs of the customers, but take away investment dollars? Ideally, I would not like to spend more than 10 to 15% of my investment dollars in that segment. That segment typically drives 60 to 65% of my revenue. The second challenge over there I have is, how do we move customers out of that bucket to the second bucket? I haven't yet told you what second and third bucket is. That's a tough problem. That's a very tough problem for some of the reasons my friends just talked about. If you overdo it, you will land up making all those changes on your nickel, which is not what you want. And if you don't do it, you will land up in a situation where both your customers and yourself are spending money in a non-efficient way. So that's how we run that segment. The second segment, bucket B, is basically our invest platforms. Those are the platforms. We usually take a life cycle of 7 years. And I will tell you, though, some of my products are on fraud. That cycle is getting smaller and smaller because fraudsters are finding so many more innovative ways to commit fraud, and the platforms are not being able to keep up in 7 years. But we try to plan for 7 years. We invest there, add functionality after functionality there, and wherever possible, move customers from bucket A to bucket B. Bucket C, which we do about 10%, 5 to 10% of our investment, is very speculative investment. We take out separate teams. We get them embedded in customers. We call it new product innovation process. And most of them don't work out, to be honest. Once in a while, we hit up on a great idea. So that's the way we run our strategy. That's the way we give our money. But to me, all the three buckets are required. Otherwise, I won't be able to pay for each other.
I want to come back to the strategy discussion. If we could pass it down to Mark. Mark, in terms of SunTrust and the legacy environment that you're, as a chief architect, are kind of designing around or designing in, how do you approach, that challenge year in and year out?
Well, I guess the primary thing you have to really worry about with legacy is if you have an issue, if it's causing issues with your business, how do I get the funding or articulate how we do something about that? So you asked an original question about SOA. At SunTrust, we use a portfolio model to drive our business decision and basically articulated the sort of the business process and the technologies into portfolios. It's a commercial bank. If you kind of look at our business, in 3 years, if we add financial products to it, chances are there are already systems or areas because we are a full service financial holding company. There are legacy bits in each. So, for instance, deposits would represent a lot of on us stuff that we've written. We've been running that since the mid 70s. We have encapsulated it with SOA, but what we've done is we've also gotten the business teams to understand what the value of these things are, and now we're adding functionality to that. We do the 3-year roadmaps with all of the portfolios, and what we're trying to do is help educate the business on really the capabilities that are driven off the various things. With respect to shared services, we take it from a fiscal point of view in order to save money and really to save time, because a lot of times no amount of money will get it there fast enough. And as a result, have been able through this education process to get people to embrace some shared services. An example would be image capture and workflow, which is being shared by our mortgage and our commercial bank, which is sort of unprecedented and unheard of, but both businesses are under significant pressure, and our profit pools are shrinking in the banking industry, so we have to do these type of things. So we're constantly looking at it, and I'll finally make a comment about what legacy is the worst. So good automated legacy systems that run and predictable, those are great things. Legacy with people duct taped to it, that is a bad thing. So, for instance, there might be some bad, maybe shadow IT processes involving data or analytics out in the business running on spreadsheets or, who knows what. That's the worst type of legacy, the stuff that you need to pull in on some kind of industrialized platform. So those things having to do with financial data, things having to do with business intelligence are things that we're sort of focusing on to try and attack that legacy. Our processing systems actually are pretty stable, and we like those, right?
What percentage of your budget is focused on what you might call legacy versus more contemporary systems?
Well, that's a trick question, because a lot of times to sunset the other legacy systems is it requires new investment. So I would say that about half of our investment budget is focused on new investment, of which the predominant amount of our legacy systems would be sunset by that activity, and then half to run the plant that exists. We are making significant investments right now just because of the changing nature of the financial services and the new regulations. So we're sort of in the situation where we're actually deploying a lot more capital into these systems than we probably ever have in the last, say, 10 years.
I'm so happy you brought up the topic of regulations. So we're going to keep you on the podium for a second. In terms of your planning and moving forward, there's all sorts of different regulations out there that, as the chief architect, you need to pay attention to. So, so what's keeping you awake at night, or what do you think is a huge opportunity?
Well, I keep awake at night. If the bankers are awake at night, then they're keeping me awake at night. So there are a couple things that keep people awake. Dodd-Frank keeps people awake if you're a commercial bank. That is the Consumer Financial Protection Bureau, which is really going to set a framework on a lot of the design or what financial products are offered. And it's a very key thing. For us in mortgage, that's a particular issue. It will end up reshaping the industry. I would say for SunTrust, that's not necessarily a bad thing, because really to do mortgage origination, you will require a balance sheet in order to do that. So we're a bank, and we actually have a balance sheet. High-level mortgage servicing is going to become an economies of scale business. It is not one today particularly, because people paid their loans. And so the chances of default were low, so you didn't have really good, stern processes around that. Now that's not necessarily the case, and so there are systems that don't exist to help do that, and we're making a lot of investments there. Dodd-Frank talks about the relationship a bank has with its deposits customers and about overdraft and about some of those issues, which means all of the banks are remodeling their checking products. So if you talk to a banker, the worst thing is a conversion. They don't like buying banks and converting customers, because if I touch customers, I'll run them off. So this legislation is like telling all the banks that they are doing an on-us conversion of all their customers to new products, and they will be required to touch all of their clients, which they don't like. And then finally, Durbin, which is really about interchange fee. And a lot of people look at banks. Oh, that was easy revenue. The way we look at it on our end in IT, it's sort of a cost recovery mechanism. We used to get a lot of cost recovery for fraud. That all is gone now, so that means that we have to change our relationship with clients, whether we allow them to use the debit feature of their relationship, and then how we combat the fraud, which means that some of the things that the card companies have been doing all these years, we are now having to do on our traditional payment products at the bank.
So a fairly significant cost is now being borne by you. John, could you deal with the area of regulation? Would you add in PCI compliance in terms of capturing and storing data?
Certainly. I have a different perspective on regulation. For first data, regulation drives us to excellence. It makes a platform or a rationale for us to go look at everything that we do. And compliance, especially with PCI and other such data protection rules, is key to what we do every day. We not only focus on that in the U.S., but in the European marketplace and in emerging markets. The government of India just a month and a half ago released a set of PCI-type compliance regulations that are very similar to what's in place in the EU. It's incumbent upon us as a payments processor in that space to examine what we do now and the legacy systems and the new systems that we're building to maintain that kind of data compliance. One of the things that we look at with regulation as well is what do we have to do with our product development efforts. So we take a very, very positive view of regulation, and that allows us to kind of review our current systems, review our product development efforts. I think the other piece of data privacy is how do you manage data around the world and do it effectively. We have recently made a move of our global database administration and brought them all under a single leadership, and in fact we moved that into our enterprise architectural group, my group, in order to look at how we comply but also provide global response and global management of data. And rather than throw up our hands and say you can't do it, we look at ways where we can do it. There are technologies out there, Golden Gate, Oracle Vault, and with the new DB2 9 versions. All those kinds of technologies you need to stay attuned to so that you can use them to manage and comply with the regulatory environment that exists now and is changing on a monthly basis internationally.
Let's pass it down to Olin and then come back to Rajiv. Olin, on the same topic. And do you agree with John in terms of government relations drives you towards excellence?
I think it can. I think it varies based on what you're talking about. So we spend probably a third of our IT staff budget on regulatory and compliance within our acquiring business that I'm responsible for. So it's a pretty big spend for us in terms of percentage. When you talk about things like PCI, I think it absolutely drives you to do the right things. I would tell you that PCI is a subset of what we should be doing. When you look at the people who have been compromised, a lot of them were PCI compliant. So we look up and above that for things that we should be doing. The thing that keeps me up at night more around the regulatory piece is purely from an IT perspective, we're typically the tail of the dog. So, we hear about Durbin, we hear about what we think is going to happen. Our internal people interpret that, and we start to put together plans around how we would address that from a systems perspective. Then you layer that on to the 300 customers we have. Not all are domestic, but and what their opinion is and how they, to the point earlier, how is each institution going to react to that in terms of what they want to do from a product or a pricing standpoint. And you get all that together. And then the IT group is typically sitting there saying, "Well, okay, I'm ready," and what you worry about is that'll all get finalized, and then you'll have a month to implement it. And everybody will be looking at the IT group saying, "Well, you've known about this for a year, but until you know what you've got to do, you don't know what you're going to need to implement." So, we include within that budget would be things like changes from Visa and MasterCard, so just general compliance things that are. It's routine. We do them multiple times in a year, but that's our perspective, or my perspective, rather.
Before we leave on yourself, when you're looking at collaboration, third-party partners that you interface with, integrate with in terms of your systems, how does that impact regulations and complying with regulations? Because you may put in standards at TSIS that you have to be sure everything downstream or upstream, in fact, is compliant as well.
Right. So, in more recently, I think there's a lot more scrutiny for partners that we deal with, where if we're looking at doing a collaborative partnership around products or something, we have to get our info security guys to go out and vet them to make sure that their standards are the same as ours, because in large regard, they are extensions of what we're doing. We have a contract with a customer. We're outsourcing. So in that regard, it puts more work on us. Not only have they got to be compliant, but we've got to assure that they meet all those TSIS standards. Other than that, I don't know there's a big impact.
Rajiv, in your context, because of the different nature of what you do, if we could deal with areas of regulation as maybe opportunities, because your analytical products are, in theory, giving you opportunities to see data before things are happening.
Right. Let me make one slight comment before we get to that opportunity part. One is there are regulations, but as I'm trying to sell some of these products out there in front of banks, one realization I have is the same law. There is enough and more confusion in every bank in understanding what is the law really trying to change. I mean, on analytical products, how much of income, what is the definition of income, to what level do you need to actually confirm it? The law is not the law can be interpreted in 10 different ways. So I think there is enough of that confusion happening that's driving the IT time cycles even lesser, because the legal department wants to play the safest game, the business guy wants to get more customers. So I think that's one point we need to be very clear about. Just because there is regulation doesn't mean everybody's understood, and that's causing more confusion in terms of running a business, apart from the IT cost part. In terms of opportunity, and of course to me everything is an opportunity. This is a great opportunity for even our IT friends. Look at what's happened. The easy money has been taken away from banks. At the end of the day, the easy money has been taken away. So banks are being forced to make money the traditional way. And they're being forced to understand, who are you as my customer, right? It's no more, let me get as many Capital One card envelopes that I can send into your house, and with 0.2% I make enough, 0.2% acquisition I make money. Those days are gone. Now you're being forced to understand, as SunTrust has been leading that, is like, Rajiv Roy is my customer. How many products does he have? Why can I not sell him 3 more products? Deposits has to be the product he has, because that's the core of a relationship that I can grow with him. That's great opportunities on the back end. For the first time, to break the silos by products we had in our systems, in our databases, in our BIs, and finally get this organized the way a bank should be. More by customer segments, more by customers. That's an opportunity for us. I know it takes time, it takes money, but I think that gives us a compelling event to go tell the business guys why they need to invest in changing the systems. And as you do that, it gives me an opportunity to sell you some more software.